Today we're going to be talking about sales contracts. And the important thing about sales contracts is that basically it is just a contract, but it is a specific type of contract where one person is paying for something and another person delivers the goods. And we kind of all know what a sales contract is, but it's a little different than just a normal contract. It's kind of a specific kind of contract. So there's 6 features of a sales contract, and a lot of these sound very similar. The first feature is that it is consensual, which means that both parties have consented to this contract and there's nothing else they need to do. It's bilateral, which means that they each agree that they're going to do something. You're going to pay money and then receive the goods. The onerous means that basically the price is in consideration for the goods. So there's nothing else that has to be done. There's nothing else. There's no more money. If I give you $1, you give me a pack of gum. Commutative means very similar to number 3, but basically it means that it is considered to be equivalent. So $1 is equivalent to a pack of gum. Nominate means that this is a specific type of contract, and we've already talked about that. It's a sales contract. Principal means that there's no other existence of contracts. In other words, there's not some other contract that has to be fulfilled before I can get my pack of gum. So there's not a contract for Food Lion to deliver the pack of gum, and then you'll sell me the pack of gum when Food Lion delivers it. So basically what principal means is that there's nothing else involved. It doesn't depend on the existence of any other contract. So those are the 6 features of a sales contract, and again, they're pretty similar sounding. Now your textbook goes on to talk about the Uniform Commercial Code, the UCC, and you will hear that a lot. If you go on to law school, you'll hear that talked about quite a bit. All I would like for you to know is that there is something called the Uniform Commercial Code, and that it actually affects sales contracts. Your book also talks about titles, and it kind of goes into great detail about titles. And I just want you to know that there's 3 types of titles. The first one is a good title. So let's think about buying a car. A good title means that you have the title in hand. It is the only title to that car, and you have the ability to give that title to another person in exchange for a certain amount of money. A void title happens when the person does not legitimately own what they're trying to sell. And you see this a lot when somebody has a stolen car, and they may not even know that it is stolen, but it doesn't matter how much you are giving for that car. If that car is stolen, you cannot buy that car. So that is a void title because it doesn't technically belong to the person that's trying to sell it. Now, a voidable title, which is not the same as a void title, means that it would have been good, but certain circumstances make it bad. So for an example, if this person that you're selling or you're buying a car from and you write them a bad check and the check bounces, then that is a voidable. He can void that title that you have because basically you stole the car from him. And there's also, if a minor, you find out that a 15-year-old tried to buy the car and they're not capable of entering into a contract, that's a voidable title. So again, your book goes into quite a bit of detail about titles. I'm not going to go into such a great detail in a business law intro class. You just need to know the 3 types of titles. And then the last thing that your book goes into is something called warranties. And we kind of all know what a warranty is. We've dealt with them. We know that basically a warranty means that it's free from defect. And if there is a defect, you have a certain time. It's basically an additional form of contract that binds the seller to undertake a certain action, which is just a fancy way to say if it breaks within 30 days, you can bring it back and get your money back. That's typically the kind of warranty that we're all familiar with. I'd like for you to know 2 different types of warranties: express and implied. And that's basically, if you think about the words, that's what it means. An express warranty is an actual written or stated warranty. Now, the thing about an expressed warranty, if this breaks within 30 days, you get your money back. That's an expressed warranty. Sales talk is not an expressed warranty. And your book does a great job of explaining what sales talk is. Just be buyer beware, okay? If somebody's making a lot of claims that you know may be bogus, that's just sales talk. Look at the warranty itself. And then there's something called an implied warranty. An implied warranty basically means that because the sale was made, then there's a warranty attached to it. So let me give you an example of an implied warranty. You go to Walmart and you buy a shirt. You assume that Walmart has paid for that shirt, and someone from China is not going to come knocking on your door asking for that shirt in payment for Walmart's debt, right? That would just be absurd. But that's an implied warranty. That is implied that Walmart has the right to sell that shirt. So your book goes on and talks about all different kinds of implied warranties and warranties of title, and they do a really good job in this textbook of talking about all of that. The important thing for you is that you know that there's an expressed warranty and an implied warranty. Basically, this particular chapter, I want you to know that a sales contract is just a normal contract that is specific to the exchange of money for goods. And that there are 6 features, there are titles, and there are warranties. So I hope that helps. If you need anything, let me know. Thanks.